Hey, this is Phil from the Next Chapter team, and today we're going to review 3 ETFs from the Global X Fund Group. We're going to look at the fund categories and other aspects of these ETFs, and then we'll check out the performance. And at the end, we'll run through a simulation of what it would look like if you invested in these funds over a course of time. Please take a moment to like, subscribe, and share with your friends and family. And now, sit back, relax, and enjoy another ETF review. Let's get started in this review. In this review, we're going to cover a quick recap of what is an exchange-traded fund, an ETF, and how to buy them. But as a reminder, we're going to look at 3 different Global X ETFs. We're going to look at one that's called the Adaptive US Risk Management ETF, an Adaptive US Factor ETF, or an Artificial Intelligence and Technology ETF. All right, so again, what is an exchange-traded fund or an ETF? Basically, it's a group or a basket of investment securities, usually stocks, bonds, and other such investment grade items that trade on the stock market. And because they trade on the stock market, item number 2, the price changes all day, just like stocks. ETFs tend to have lower expenses and fewer brokerage fees, a little different from mutual funds. Jumping into things, how do you buy an ETF? Well, basically you buy it, do a quick 4-step process. 1, determine the account you're going to buy it in, usually an IRA, individual retirement account, or a brokerage account. Why usually those 2 spots? Because typically you don't see ETFs inside a 401k, unless you're a self-employed person, in which case you actually can have ETFs in your 401k. And again, this comes down to the company you work for and what they want in their 401k. So this is different for everyone. Next, you decide which company you're going to open up the investment broker account with, which investment broker you're going to work with. That's just usually go with one of the big ones. Nice, safe, they're regulated, and of course, look for ones that are low in fees. And then from there, number 3, focus on how frequently you are going to make your investments. We usually tell people, if possible, do it the same pace which you get paid. But if you can't, at least do it monthly. And then from there, set it up to be automatic transfers in and automatic purchases on what you want to invest in frequently. For each ETF, we're going to take a quick look at what the ETF category is, fund benchmark, fund summary, expense recap, top holdings, and then of course the fund performance. By looking at all these factors, we're going to get a good 360 view of what is happening with the ETF. Then further, we'll use the fund performance to tell us, hey, what would the balance be if we invested consistently over a period of time? And it may inspire you and others at some point to invest in an ETF of similar nature. And again, this is not direct investing advice. This is just to show you the possibilities that are out there. First up, we're looking at the Adaptive US Risk Management ETF. This one has a fund category of large blend. This one is trying to perform against the Adaptive US Strategy Risk Index and exposes 100% to US 500 index funds. So you're probably going to see this is all US based. What do we have for management fees? 0.4%, 0.40, which means for every $10,000 you have about $40 of expenses annually. Now let's jump into the next section. Okay, what are our top 10 holdings? Well, check it out. You've got 507 holdings first off. And then from there, when you break it down to the top 10, you have companies like Microsoft, Apple, Nvidia, Amazon, Alphabet A, Meta, Alphabet C, Eli Lilly, Broadcom, and JP Morgan Chase. And jumping into the performance, this one hasn't been around too long. So you have a 1 year of 15.32 and a 3 year of 6.9. It does even have 5 years. So this is a pretty short-term one. But as you can see, the performance has been pretty darn good for those last 1 year and 3 year as an overall. And since inception, 8.52. So again, this one has some real potential over time to really be something that could be attractive to some of our investors. Next up, we're looking at the US Factor ETF. This one goes by the ticker of AUSF, fund category mid-cap value. And this one is going off of the Adaptive Wealth Strategy US Risk with 3 primary factors: value, momentum, and low volatility. And check out that expense ratio. That's nice, 0.27. So for every $10,000, it'll be about $27 annually to hold on to this fund. All right. In this fund, you have 191 different stocks or equity positions. And what companies do you have? Verizon, AT&T, IBM, Walmart, T-Mobile, General Dynamics, Berkshire Hathaway Class B, Lockheed Martin, and Arthur J. Gallagher Company. All right, and Marsh and McLean as well. So that's a pretty good mix right there. Now let's move into that performance. All right. No, sector breakdown. So sector breakdown, we've got 26% in financials, 13% in information technology, healthcare, 11.18 industrials, and 10%. Then from there, quick rundown, all of these are less than 10. Consumer staples, consumer services, communication services, energy, consumer discretionaries, materials, and other. This is pretty darn good. It's a nice little mix of sectors as well with this one. All right, now let's move into the performance. What do we have for performance? 1 year, 38.34. Wow, that is pretty darn good. 3 year, 12.33, still awesome. And then 5 year, 14.38. And since inception, if you've been holding on to this, where you're an early investor, you would have enjoyed annualized, so averaged out between all the years, 11.72. That's pretty darn good, actually. Okay, our third and final ETF of this review. This one is the Artificial Intelligence and Technology ETF that goes by a ticker of AIQ. Fund category is technology, and this one is seeking to perform companies that provide hardware and facilitate the use of AI for all of its analysis and big data. So very, very, very focused here, clearly. What do we get for that? Expense ratio of 0.68. And that gives us annual expenses, if you had about $10,000 invested, about $68 per year. All right, jumping into it. 84 different holdings. That's what you'd have in that. So 84 different stocks probably. What companies would you have? Top 10 holdings by percentage. So we got NVIDIA, Tencent Holding, Qualcomm, Netflix, Meta Platforms, Alphabet Class A, Amazon, Broadcom, Alibaba, and Oracle Corp. You can see on the high, you got a 5.25 with NVIDIA, and the low, 3%. That's really still pretty good. And overall, since there's not a lot of them that are over 5, you've got some great market exposure as well as diversification. Let's talk about diversification a little further. What do we have for sectors? All right, check it out. Sectors, you've got technology, which you should expect to be pretty darn high, right? Technology breakdown is 63%, communication services is 15%, consumer discretionaries is 10%. Then from there you have below 10, industrials and healthcare. Now, industry breakdown, so users of this technology, I like how this is a little different, adding another layer of knowledge to this prospectus, right? That's where we grab this information from, is from the fund prospectus. You got packaged software at 19%, semiconductors at 17%, internet software and services 17%, information technology services general 13%, telecommunications equipment, so that's the hardware portion that they were talking about 10%. Then from there, you've got internet retail, industrial conglomerates, motor vehicles, and electronical products. And then finally, other. Let's jump into that performance. Let's take a look at that performance. All right, 1 year, 27.95. 3 year, 5.14. And 5 years, 17.5. And then since inception, you have 14.54. You got to hope that this one stays nice and strong like this, because it becomes very attractive for other investors over time. So finally, we're going to wrap up our review with what would it look like if we invested in all 3 funds consistently over 3 years. Okay, so jumping into it, let's take a look at what it would look like if you invested in this consistently over time. This time, we're going to invest in a general investment account. So this one, you have no limitation. We're going to do $10,000 per year. And as a reminder, we're doing 3 funds. So the first fund had a 1 year return of 15.35 and 3 year of 6.19. Our second fund, the US Factor ETF, had a 1 year of 38.34 and a 3 year of 12.3. And then finally a 5 year 14.38. On our final one, this is our Artificial Intelligence and Technology one. This one had a 1 year of 27.95, 3 year of 5.14, and then a 5 year of 17.5. All right, so if you invested in just 1 year, the balance would be roughly $12,700. And how would that break down? About $10,000 of straight principal, just what you've invested cash. And then from there, the rest would be about $2,700 and growth. So it would be 78.9% principal and 21% growth. let's take a quick look at what it would be if you invested for 3 years. All right, not bad. So the dynamic changes over time. Invested dollars would have been $30,000, and that would have been about 86%. And then your investment growth would have been 14%. So that would be $5,000. So again, $35,000. I'm sure that if we had the opportunity with more data, you'd see even better results over time. But we got to work with what we have. So hope you enjoyed the review. More reviews to come. Talk to you soon. Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please take a moment to hit that like button, drop a comment, subscribe, share with your friends and family. This will help the channel reach out to more individuals just like you. We offer one-on-one coaching where we work with people and small businesses to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. So please see our link below to schedule a free 30-minute call with our team to talk through coaching and understanding your current financial situation. Also, check out some of our affiliate links below for our high yield savings account. This is a great place to put your money when you're saving up for those big purchases and your emergency fund. Check out some of our videos right here. And please enjoy and see you in the next video.